Hello, guys. Um, Wonderful to be with you again today. Today, I'm going to be showing you what I like to call the smart money um, pullback for continuation. Okay, um, it's a price action behavior that I've seen in price, and I've seen this to be consistent with the action of smart money. Okay, whenever they want to go, whenever they want to continue price movement in a certain trend, this is what they always use, and there's a reason behind it. Okay, um, you're looking at the volatility 10 index. This is the 1 hour chart, and we saw price coming up, run up like this. Okay, and this impulsive leg down makes me think and believe that the market is about to go down. Now there is a deeper insight for that, but that is something else. Okay, but I believe that the market is coming down. Okay, the purpose of this video is to show you the pullbacks, how they do it, and when they do it. Alright, so you see the market went up, and now I believe it's coming down. I use my forex strategy basically to know when whether to trade this movement downwards. Okay, but I'm giving you for free what I call the smart money continuation pattern. All right, so it doesn't matter whether they're continuing price upwards or downwards, the case is still the same. That's what I believe. So I'll take you down to a smaller time frame to show you my entry, because that was what I saw basically that made me to enter the market, and you see how prices responded ever since. So let's go down to the smaller time frame. You see the entry. This is a very fine entry. It's a good one. Like I always say, guys, there's some things about price that you can discover. All right, and you see the entry. It is a slight sniper. You can only get this kind of entry consistently using price behavior. All right, so let me show you what I call the smart money entry, guys, or the smart money continuation. So we saw price coming down. This is the 5 minute chart. Same chart, volatility index. This is the 5 minute chart. We saw price coming down strongly, and yeah, there were a couple of entries here. Okay, you learned that in my forex plus. But in case you missed that and you're looking for the smart money continuation pattern, this is what I call the smart money continuation pattern, guys. You see, when they came to this point, they pushed up. Now this trend is big for everybody to see. All right, and therefore there are a lot of people who are already waiting for the market to pull back significantly, and most people are going to be using indicators, the oscillators, to judge whether the market is overbought, all right, or oversold, so that they can jump into um, the the market, the trend. Okay, so the trend is big for everybody to see. All moving averages are going to be pointing down, and those who use oscillators to time their entries are just waiting for when the market goes to overbought, okay, before they come in. Right. Now the market came to this point and then began to go up, 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 up. You see that? It gave us a swing high right here. And I believe that if you check your oscillators, the commonly used oscillators, if you check that, it should be giving you an overbought reading. Alright, at this swing high. Now, they those who wait for candlestick patterns are going to be looking for to see whether, okay, will we have a candlestick patterns. Now we see um, this uh, bearish candle come down. Great. Then we had a bullish candle following it, and then we had this shooting star. Okay, then you now have this um, big bearish candle as well. That is a lot of confirmation for a lot of people. We use candlestick patterns for the confirmation, and so they're going to be jumping already into the trend, hoping to get a continuation to the downside. All right, so here is where the magic begins for them. So their hope is to the downside, but market gets to this point, didn't come down to the swing low, gets to the point and turns back up. Now, those who get into the trade here for a continuation are going to be putting their stops right above here. Okay, they're going to be putting the stop right above the swing high, hoping to ride this to the downside. Then market comes back, clears the stop, and I call that stuff reaccumulation. So they use one stone to kill two birds. You've heard that proverbial statement? Using one stone to kill two birds. So market comes back up, activating the stop loss orders right here. You know what those stop loss orders are going to be? They are buys. Okay, so the market comes and triggers that, therefore creating buy side liquidity in the market. That's good for the market makers. Now, at the same time, they are going to be mitigating. Now, that's a little deeper stuff, but they're going to be mitigating their former entries, okay, which are not good for the trend of the market. So they're going to be mitigating those positions. In other words, they're going to be taking those positions out of the market, but at the same time, reaccumulating their positions here. In other words, selling more, okay, so which is good for business for them. That's the time when the trend is most likely to shift. Now, I'm not saying that once that happens is what, you know, but that's the time the market, the trend is most likely to shift and continue in the direction of the main trend, because then they've done the business. All right, so look at what happened here. You're not just looking, unless you have deeper insight in price behavior, then you should know when to take this trade. You should know when they are playing this game, right? Um, I could have taken this trade here if I've seen it, all right, based on price behavior and based on what I know they're coming for. They first of all look for the liquidity here, and they are going to look for where to mitigate their orders that it took when the market was coming down. All right, so here was another thing that made me to take the trade when I did. So after what happened up there, they came, market price came and broke this level. Now that's structure stuff. So price came and broke that structure low you see right there. Okay, this price swing down broke this structure low. That is another confirmation that the trend is now shifting. All right, then price comes and made a failure swing right there, and there was a reason why I had to take the trade up there, and you can see what it had amounted to. All right, guys, that's just basically what I wanted to show you. It's a simple stuff that I look at for in price whenever I want to trade continuation. Okay, but there are other stuffs in play, guys. Like I said, if you don't know how to get into the trade at this top, right, you can be looking for when, okay, after these kinds of things, this stuff has played out, you can be looking for when there is a breaking market structure like this, and that's simple to understand, to find out. So when you have a breaking market structure, then a failure swing, you can now be looking for your entries. All right, simple enough, guys. Like I said, guys, there are reasons why the market do what it do, and if you find the reasons, it becomes easy for you to find those things playing out on your chart. Once you can find them easily, great for business. Okay, it's a short one, guys. I hope you love the video. I hope this added something to you. You can go and check this stuff on your charts. It's powerful, it works. Okay, trade with caution, guys. Remain blessed. Love you.